Well, hello, active traders, and welcome to our Trading Week Ahead broadcast for today's Saturday, August the 6th, 2022. I hope y'all are doing well. It's been a really good week for me, and I hope that it's been a good week for you as well. We're here in summertime, and markets are at resistance. And of course, the big question on everyone's mind is, are we able to break over that 4,200 in the S&P or not? Let's make sense of this and see how to put together a sensible, professional game plan for trading the upcoming week ahead. Now, as I mentioned last week, that 4,200 mark is the key resistance area. It's widely expected we'll likely break out just a bit above it, and then a big epic drop, and then a end of year bounce, right? That's my take on it, and other professionals seem to feel the same way, looking at some of the talking heads on TV. So we're at a point of indecision. What that means to you as a trader, what I want you to think about step by step next week is, what does the market do as it breaks near 4,200? Do we get a gap down? Let me ask you, what current event may well lead to a gap down in the stock market on Monday? Who can tell me? Hint, it has to do with dumbass politicians in Washington. But what market moving event may well cause a big drop in the stock market come Monday morning? I'm not seeing a lot of comments. They're voting on the infrastructure spending bill to waste more money and cause more inflation and hire an army of thousands of IRS agents and all kinds of foolishness. Anyway, if that passes this weekend, God forbid, I hope we don't get more government spending and taxes and all that kind of crap. But anyway, if that passes this weekend, then odds are the market will crash and burn on Monday, or at least have a red start. So that's one current event to pay attention to. We had our NFP yesterday. They came in hot, right? The jobs report. What everyone cares about is what's next, right? So let's take a look at the market. You can see key resistance at the 4,200. And let's see, where would I be shorting? I'm in a little UVXY as I usually am. I'm going to be looking to short the market. And that's a good question. If we lose first short signal, would be a loss or slash long and inverse ETFs like SQs, UVXY, and others. SOC says those are the three that I trade: SOXS, SQQQ, and UVXY. That's how to short the market if we lose the 4,100. So that's the kind of micro support resistance is 4,100 to 4,200 in the S&P. So yeah, if we get down there, the other thing we always want to look at is our VIX. Then we stay long bias until the VIX gets back over 24. And I fully expect it will. The VIX goes up and it goes down, right? It's a wave-shaped instrument. So it makes sense to, buy low, sell high, which is why I bought some UVXY on Friday. Even though it looks terrible and it's at a 52-week low, that's usually a good time to buy it. Watch the week ahead and see where UVXY goes next week, and the VIX for that matter. Now, so long as we stay under 2,400, we have a net bullish bias. So if we stay under the 24 VIX, that's still a net directional long bias, and that will be accompanied by a breakout to the upside in the S&P. But if we get back over the 24, then the bears are back, and you want to be out of equities, right? I've had a relatively fast run, but as one smart guy on CNBC, Carter, had said, too far, too fast recently in the S&P, and I agree. We've had too much of a quick run up in the S&P, kind of a bear market rally. It's been fairly strong, but with oil and inflation and all these other problems, we still expect some headwinds and some pressure on the market for downward price action. So what we want to prepare for are two things. One is how to profit from the market going down. The other is how to profit from the market going up. And we know to stay clear if the market goes sideways. Now, before we continue on, just a quick reminder. I did put my courses back available now. By popular, I got so many people emailing me, when are you going to put the courses back on the site? So I have a sale, a quick commercial message here, no more than 20 seconds. Go to tradingvideos.com. That'll forward you over here to trademastery.com/instant video downloads. You can save 40% on all the courses. I've taken them off the market the last several months, but now they're back with the coupon code WIN40, WIN40. So I've got dozens of courses for sale as low as $27, right? So they're not like they're $2,000 or anything. Most of them are around $100 or $200, so pretty inexpensive, and you get hours of training in my professional video courses. The other thing to look at is my live trading room, and obviously we've got so many people who joined lately. You may want to try that for $7 for a couple weeks. One thing that I added to the live room page this past week by popular demand, for those of you who want to see what the room looks like and feels like, for the first 15 minutes or so, I recorded this back just on the 4th, what was it, day before yesterday, on Thursday, right? So 15 minutes of the live trading room are captured here on a YouTube video, and you can watch that. And I also, by popular demand, created a couple of quick start videos to help people learn how to use one triggers the other trades. That's very useful, by the way. Yeah, even if you're not a room member, you're certainly more than welcome to learn from this video. It's how I trade many thousands of trades a year. One triggers the other orders. So you automatically put in a trailing or hard stop once your order gets filled, so you don't have to worry about it. So that's a big peace of mind, and also lets you automate your trading to a much greater degree. So that's a good video that's on the page, and the purpose and use of all the charts and how they're set up, so you can follow along with the live room also there. All right. Now let's get back to it. So the VIX 24 is the key line in the sand, right? That's obvious. Previous support is now resistance, as you can see right here. We're in kind of an uncertainty zone here, between a nexus of uncertainty between 21 and 25 or so. But if we do climb back over the 24 in the VIX, which we will at some point, guaranteed, the VIX will go back up. It cannot stay down forever. It always goes up and down, then up and down, then up and down. Now, if there's an instrument that you could trade, an ETN or an ETF that follows the VIX, being armed with the knowledge that it has a sawtooth pattern 100% of the time for life, and it's guaranteed to go back up, what would be a smart thing to do right now? Just asking. Probably buying VIX ETNs, right, or ETFs. So that's why I'm in some UVXY, although it's taken out a 52-week low yesterday. When this is down, if you're trading, it may be good for a move up. Anyway, let's take a look at some charts here. I'm going to switch over to day trading charts here for the day traders. You know who you are. Let's take a look at some really good charts. AMC was a rock star yesterday. Ba-la-dum-ba-dum. Oh, I've got hours out to the 2000. Let me... Oh, by the way, this is a quick advanced tip for professionals, or from a professional to those of you who want to be. I often trade in the aftermarket for overnight holds, and so I look at aftermarket charts, and so I put the time out to 2000 hours outside of normal hours. If we put regular hours, it looks like that. Anyway, AMC had a truly bullish engulfing rock star day yesterday, coming from below near 17, running all the way up to 22.5. So AMC is definitely on the radar for next week. These are the kind of charts that I cover for members because they move. Move it. Seago is a nice open range breakout runner on Friday yesterday, going all the way from 19.5. My long call had been 19.20, right on the open, right as this thing opened, it triggered. I posted the 19.20 alert for my members before the opening bell, so they knew to go long, long before it got to the 19.20 level. And I do that every single day, 5 days a week. I post exact specific prices above which to go long, and frequently they work out. So if you bought the 19.2 there, you could have made something. Now again, we don't expect people to hold it all the way for a long time, and maybe find it like by the 19.2, selling the 20 would have been just fine. Even if you miss out on the big later part, that first run from 19.2 to the stall near 20 or 20.5, that was a good initial run because it ran over $1. Anytime you can make over $1 on a $19 or $20 stock in a few minutes is a good thing. Bed Bath & Beyond has truly been a monster runner. I remember I've been mentioning it here for you guys as well as in the live room since 5:05. That was my long call for a swing trade. It was $5.05. Now it's all the way up at 8. A huge run. And it still may well have more to run. I also like PTON. And again, my live room members get my specific entries and exits for swing and day trades. And also a lot of times traders will ask, hey Ken, what do you think about this stock? And I'll pull it up and tell them, my specific, would I trade it in the first place? And if I would, how would I enter? Where would I try to stop? Where might be a target? Anyway, PTON ran all the way from 10 to just under the 12. This is a good example of whole number support at 10 and whole number resistance right under the 12 at 1190. It's always often a good idea to trade within whole numbers. That's a strategy I've developed and trained many thousands of people in, is the whole number. You may have seen my article in Stocks and Commodities magazine on the topic years ago. You go in right above a whole number and then you tighten up a trailing stop or go to cash once it gets near the next whole number up after you bought it. CVNA, Charlie Victor November Alpha, was a really good runner on our session yesterday, going from 35 to 48. So only $13 run on a $30, $40 stock, so not too bad. Let's see. Hey, John, being so close to the 4,200 of the minis, why buy anything now? Yeah, we don't want to buy any. This is for day trades. These are day trades. For swing trades, I'm completely with you. We do not want to buy stocks right now. Now is a terrible time to buy stocks. In fact, I told my traders, go to cash yesterday and sell strength in stocks. We're at resistance, so you do not want to buy stocks. That's correct. What I bought was a little of the inverse UVXY because I'm betting short, even though we're right up against it. So in case it drops, mine will pop. But yeah, you're right. Now is not the time to swing trade anything long unless we get over and hold over. That 4,200 up there. And again, don't get faked out by personally, I'm not going to initiate any new swing trades until at least, the market will have to, and this is a rider downer, the rule of 3 days is a well-known Wall Street thing, is basically don't believe a breakout unless it's been holding for at least a few days. And so, for example, here, I'm not going to initiate any new swing trades to the long side unless the market gets over and holds over 4,200 for a minimum of 3 days. And that's important because we'll probably get a false breakout. The expected pattern is a false breakout, a fake out. The market may break the 4,200 just enough to get the newbies in. It may go up another day. They'll say, yeah, it was right. And then big epic crash. So wait for at least 3 days over 4,200 prior to going into any swing trading long stock positions. Now, that it is a strong trend, so we do want to get into it if it does hold over the 4,200. But if it fakes out and goes back down, we don't want to go in, right? We want to stay clear, stay in cash. Stay safe. Now, some recent charts that look really good. GDXU. I concur with Kramer, who mentioned on Thursday's broadcast that he likes gold here. I like gold too here. I think GDXU is the best way to trade that, and thanks to my trader Mick for mentioning this one. I used to trade GDX, which is a great chart, but the leverage is so much better in GDXU, right? Look at that, 4 from 20. That's a 5x delta. This is 26 to 42, less than a 2 times delta. So a sincere thanks to Mick for this one. GDXU, I want to go long on any new high, especially if it gets over $5 a share. So gold bugs unite. Best gold play out there. I like Barrick. I think ABX right was good. But for ETFs, I like GDXU. Apple's been on a nice run here. Solars are hot, so to speak, because the federal government is talking about green initiatives and spending money on solar, so all things in the solar sector are heating up, and Run Solar is one of those. There's many others out there, but solar sector, let's say, commodity-wise and sector-wise, we went to short crude oil, by going long SCO on any sign of continued strength. If the price of crude continues to drop, which I expect it will, we're going to continue to go long SCO. I've been long this for weeks and happy about that. It's continuing on up. Definitely if SCO gets over 30, I'll be scaling into that because look from where it came, from whence it came. 110 just a year ago. So this is probably a good place to go for a bounce, just like our gold miner GDXU, I should say gold miner ETF GDXU is also a good place. So short crude, long gold, long solar, and we'll see what other sectors are out there. Also, like I've been mentioning to you good folks the last 2 or 3 weeks, long Marathon, Coinbase, Riot Blockchain, long the cryptocurrency ETFs. I've been calling that for the last 3 weeks for you guys. So did anyone listen? I hope so. Hope you're making money like I did. Anyway, Marathon I've been calling long for you guys since 7-8. Now it's almost double at 15. Still good for a lot if it breaks over the 15. So I'm looking to rebuy into Marathon if it continues on up. If you guys remember here 2 weeks ago, and for my live room members even earlier, I mentioned Ford would be a good long over the 1250 or so, and now it's all the way around up to 15. So Ford's good. I don't like the, I had to say, what's the red flag? What's the reversal candle we see that tells us now would be a really stupid time to buy Ford? Why would we not buy Ford now? What candlestick pattern is there that tells us we have a bearish reversal in play right now? And so it's a good time to sell and take profit, not a good time to buy new shares. Right, Mira. On Mira, I want to say thank you very much for the email. I sincerely appreciate it. And my longtime trader, Mira, thanks to you and Irv, I appreciate it. Anyway, yeah, shooting star, absolutely. So with shooting star at the whole number 16. So trail a stop on Ford at 15, buy in over the 16, right? That's what you do. So 1640, 1650 for long. And if you're in Ford, sell it all if it loses 15. I'm more keen on Disney than I am Netflix for a recovery play. And also our healthcare plays have also done reasonably well. Yeah, ENPH looks good. Humana looks good. You know, so for, you know, long-term investors and all that, some of the healthcare, that's one of the few sectors that I think is, in addition to some of the, how to say, value versus growth, and consumer cyclicals and other defensive plays, utilities and banks may be okay. Let's see, where's... Banks are starting to bounce. But personally, I want to be focused on the extreme charts. I found that it is easier to make money with the extreme charts, the charts with big ranges that are kind of overdone, that then bounce or pull back, than it is slow grinding charts, because those are often, takes a lot of patience, which I don't have. What I want is charts like this. So GDXU makes perfect sense for a bounce long over 5, right? That's probably going to be a really good play. GDXU over 5. You've seen how consistent my swing trade alerts here in these trading week aheads have been for you guys, right? So again, for more, be sure to join my live room because you have daily updates and also daily personal answers to your questions about, hey, Ken, I'm long this here. Where did you tell us to stop? That kind of thing. So I can answer your questions. I give you entries and exits with specifics, the entry price to use, the stop loss to use, and the target. So you've got all of it, you know, delivered on the silver platter. I've got a little experience to help, so good stuff. Let's see, CYTK. Do you guys have any charts you want me to pull up? Let me know. Yeah, good momentum runner. That would probably be good for a day trade. Let's take a look at the day trading chart. Yeah, that's a wonderful chart. Thank you. I'll put that in our portfolio box. We'll cover that Monday. It's a wonderful chart. Yeah, thanks. That's a good one. Thank you. That's the kind of chart. This is like a buy the open, sell the close chart, right? That's a strategy I've been how to say, notoriously never able to do myself because I'm too impatient. But it's I mean, I'm on occasion I've tried, but I'm not patient enough. But for those of you who have the patience, a helpful strategy is to instead of scalping or instead of doing 5 or 10 or 20-minute round trips for intraday, consider this. You buy an opening range breakout as soon as it makes a bullish cup breakout or trend breakout. You buy it there, put a hard stop under pre-market low, and then walk the blank away until 3 o'clock, and well, maybe till lunchtime, and then tighten in a trailing stop, and then let it run until 3:30 or so, and sell into the closing range there. So this is a good example of a chart where instead of trying to navigate the ups and downs, this is true for any day trading pattern. When you have a breakout above the previous day's high, which is the best kind of chart to trade, by the way, you can try and all day long buy the open, sell the close strategy. So this is 9:30. Let's say you bought here at say 47 or so, and then it promptly crapped out, but your stop is under the pre-market or opening range low 45. So you wouldn't have gotten stopped out on the pullback. You'd keep it alive and then check in at lunchtime and tighten up a trailing stop just in case it does the opposite of a V-shaped recovery, may do a parabolic arc. So lunchtime is usually a good place to tighten in trailing stops and then let it ride from there into the close. Now this instrument I would not use for a swing trade because the range is too big. When it comes to stock selection and how to trade, it's important to have ranges that are big as possible for day trading, but more consistent and steady and not extreme. For example, I do not want to swing trade something that has a 8-point or 5-point previous day's range in case it gaps against me. $1 or $2 range is good for swing trades. For day trades, though, we like things like this. So yeah, that's good. We'll see. And again, a classic breakout would be north of 53.30 or so in that one. Let me know if any other charts. Hey, Tony. Yeah, we covered Sophie in the room. I think it was better Thursday than Friday. No, not good either day. Well, we did cover Sofitel in the room. I think maybe it was early in the week. You take a look at the daily, you can see pretty good volatility in this guy trying to bounce. And yeah, this would be a good bounce. Yeah, that's a good bounce chart. Where did we close it? Just under 8. So again, not a trade recommendation, but I may look to swing trade this again over say 860 or so, and then again over 10. But yeah, it's a good bounce. So it is starting to bounce. One thing that's especially valuable in our current markets is to make sure that you do swing trade relatively small size because of the random haphazard nature of our current markets. And personally, I want to be kind of conservative. Again, SCO is a good crude oil ETF to trade if the price of crude continues to drop. This will continue to recover. A year ago it was 100 a share. Now it's down at 25.30. That's a good price range to buy this thing in. Anywhere near 30. So we'll see where it goes. See a question about do I think silver would do better than gold? No. Now look how terrible UVXY looks. Now, why did I buy it on Friday? This looks terrible. It looks like a horrible chart. Well, it could keep going down. Maybe it'll bite me. It'll get gapped down to 920 or something. But it had been 1116 was the 52-week low that got lost back on Tuesday or Monday, maybe last Friday. Recently, 1, 2, 3, 4, 5, 6, 7. Anyway, UVXY is a favorite of mine for up and down price action. So if the VIX goes back up, which I expect it will, then this will pop. So this one has good upside potential as well as our directional breakouts and things like SOXL. Here's another quick tip. I'm going to wrap up here soon. The area that I've marked out is an uncertainty zone for the market, and it's likely to have whipsaws and false breakouts or false breakdowns, and therefore is best avoided. It's all, as an active trader, been trading tens of millions of dollars for so many years. I've learned the best strategy when there is no edge, there is no clear advantage, is to not engage or do not put on many trades. Or if you do trade, I still trade every day. I got to trade. That's what I do. But I trade smaller size. So instead of 400 shares, I might do 50 or 100 shares kind of thing per trade for a sequence of trades. Anyway, if the market stays within this region, the 4050 to 4200, which it may well, it may just hack around and chop around next week, it's going to be a frustratingly tough time to trade. So my tip is to at least not trade very actively until we break under support or above resistance, and preferably hold that for at least a couple, 3 days. So good stuff. Let's see what else. Oh, thanks for the kind words. I appreciate it. Let's see what do we, thanks. Could I check EXTR? Sure. Yeah, good momentum runner. But it's late to the party for long, right? It's already gone 9 to 13, so I wouldn't be chasing it up here. That's another thing. Here's a quick tip, and this is another valuable rider downer, is when you look at, say, a 1 year or any time interval for swing trading charts, I like 90-day chart. If it's already ran in the direction that you're considering for half, 50% or more of the total trading range, you're kind of too late. Okay, so this is half of this range, 16 to 9, or 8.5 to 16.5. That's $8 range. So 4 points is middle, and 9 to 13 is just over that. So it's already ran half the range. So is it worth a shot? Yeah, sure, but small size because it's over half the range. That's one thing you want to do is, if something looks appealing to you, figure out what the recent price action is doing relative to your rules. And for example, for me, I don't like chasing stuff that's already ran at least half the trading range. So I'm not gonna trade that because it's already done its thing. Now, that's not to say it may not go up to 17 or 18, which it may well do. But after something's run over 50% of the 90-day or the whatever trading range time interval that you're looking at, it's usually too late. And so that's why we get into false breakouts so often, as being a little late to the party. Now, the strategy that I teach, one that I've taught for many years, is go long above the high of a large candle that occurs at the right side of a bullish cup, right? So if you have a bullish cup, the letter U, and you have a large green candle, especially a high volume HV, high volume large candle at the right side of a cup pattern, then you go long right above that. So long would have been 1060, 1080, maybe as late as 1120. But if you failed to take that signal here, up here you're kind of chasing. This would be a place I'd want to trail a stop at 1320, 1340, but I would not be initiating a new trade. It's a really good uptrend though. So that's something to think about. Again, this is the SPY on the 3-month. You can see it's getting near. You got a bullish cup here, and we're likely to run into resistance at the 420. All right, we are about out of time, friends. I wanted to thank you all for being here. AMC gets my vote for the biggest Rockstar winning chart of the week, last week, Friday at least, and you can see yesterday a big runner. And then again, a quick tip. The day after a big run, what usually happens? After a big move, is there likely to be another big move on the next day or not? And the answer is no. It's not. It's likely to chop around on Monday, maybe Tuesday. But then Wednesday, as early as Tuesday, maybe Wednesday, then it'll do either a big retracement or a big breakout. The day after a big run is usually a quiet non-event, just like the day after a big gap up or down is usually a small fill or very small breakout. So it's usually not smart what that means to you as a trader is it's usually a bad idea to trade an instrument, let it get all excited. I'm all excited because it did a big run. The day after that's likely to be a non-event, kind of a choppy day with a much narrower range. It's the second day, so Tuesday, this might be good. And that should help you for the rest of your life as a trader. Avoid trading things the day after a gap or the day after a big monumental run, because it's kind of like exercising. A big move and then a little rest. And then, like when you work out, you're supposed to work out every other day for strength training because you want to give your muscles a chance to rest for one day. Same thing with the market. After something makes a big run, give it a rest for a day and then get back in and trade it the second day after the run. See, someone's asking about Yao. Yeah, it's okay. It's too up and down on the, but pretty good. It's a question: is VIXI the same as UVXY? No, different leverage. The same instrument category though. So again, I like Ford, I like Bed Bath & Beyond, I like GDXY, I like SCO, and others. So anyway, I hope that helps. We're going to wrap up because we are out of time, folks. I want to thank you so much. And again, if you at least look at some of these free videos on the trademastery.com/live page. I updated the live room page last week and added, by popular demand, traders are asking me for training videos. And these are only like 6 minutes each, so take a look. And if you want to consider the live room, first thing I would do is take a look at 15 minutes from Thursday. The first, like from 9:30 or 9:25 to 9:40, something like that. The first 15-ish minutes of the market I recorded for you on my Thursday broadcast. This is exactly what my live room members saw looking over my shoulder on Zoom kind of thing. So you may want to take a look at that too, and it's at trademastery.com/live. And the other thing to consider is we've got lots of courses, and they're pretty good price, right? They're cheap, right? I don't charge thousands of dollars for my courses, so you can see they're all modestly priced and 40% off of even those low prices. And that's at trademastery.com/instant video downloads. Or you can just type in tradingvideos.com into your browser and it'll forward over here. So coupon code is WIN40, WIN40. And I'm sure you'll find them of great value, and they're good. They're based on real money trades that I've done. So I'm a seller of lessons learned. That's why I run my business. Is I sell all the lessons, sell knowledge of what I learned, the good, the bad, and the ugly, everything about trading on different topics. And of course, in our live room, that's where the magic happens, where I've got all the live alerts each day. And we have a lot of smart traders too, which is cool. And you can try it for just $7 for a couple of weeks. So anyway, y'all take care. Have a safe and hopefully stay out of the dang heat weekend, right? It's been a hot week here in Colorado, at least. I hope it's good for you guys. So I think that'll wrap us up. Thanks so much for being here. Take care, and I'll see you when I see you. Trade smart, and we'll do well. Bye for now.